Hey, we're back with another episode of Go FUD Yourself. Today is BTC and ETH News Day, which has been a pretty exciting day every week for the last little bit because BTC and ETH is ripping. But we're joined with a new guest today. Christine, how you doing?
I'm good. How are you?
Oh, wonderful. Is that the last L2?
Yeah. It's my shirt for every day, but I'm going to turn it into a positive and say live every day like it's your last day, but that's really not.
I was going to say, are you pretty sure every day is your last day? Hey, you're the founder of a project on Flare called Kinetic. Just quickly, can you pill the people on what Kinetic is all about and why they should check you guys out?
Yeah, they should check us out. We're not live yet. You can follow us on our Twitter, Kinetic Markets. What are we? We're another borrow lend. It's amazing. So the difference is we're built on Flare. Flare, if you don't know anything about it, has F assets coming, which is a better way to do things. I am not a one ecosystem to rule them all person, but I am a safety first person. And so, it's just a more secure, decentralized way to participate. And it gives a way for you to participate with things like Doge and BTC that's not wrapped in DeFi. So it's really cool. Come and check us out. Yeah.
And kinetic.markets is also the web URL, I believe, right?
Yeah, we got lots of big stuff happening. We're gonna launch a token soon. We're going to launch Genesis pools and testnet soon. It's all happening. So if you want action, we've got it.
Awesome. All right. Well, today, obviously, we can't go a day talking about Bitcoin and ETH without talking about the halving. So we're going to talk about that for probably the first third of the pod. Then we're going to talk a little bit about China and some ETF approvals in Hong Kong. We're going to talk a little bit about the Ethereum price soaring. And what else? What else we got? We got the Dencun upgrade. We're going to talk a little bit about that since that went off without a hitch. And yeah, talk about ZkLink and some ETH Foundation proposals. All ETH, all BTC. Are you ready?
I'm ready.
Let's go. All right, we're back. Christine, you want to kick us off?
Yeah. So let's do this. Anticipation builds for Bitcoin halving. Predictions on price impact. This says the Bitcoin network is on the brink of its halving event, slated for April 19th, sparking widespread speculation about its potential price impact. The significant event will have the reward for mining new blocks, effectively reducing the new Bitcoin supply and potentially increasing scarcity. With Bitcoin ETF volume maintaining strength, post all-time high, institutional interest appears robust ahead of the halving. Previous halvings have historically led to price surges, though immediate effects varied. Okay, do you think the immediate effects are going to be varied?
Did you expect to have a reading test on joining the pod today? Well,
what's really funny though is it's really weird when you're reading something for the first time out loud while you're presenting it. I haven't read through these, so I'm trying to figure out what I'm reading as I'm reading it.
It's okay. You're doing a good job. You're doing a good job. As far as the Bitcoin price goes, I've kind of been a bit of a stuck record on this one. The answer really is be careful. This is the fourth halving, I believe, and all the previous halvings have been slightly different in how the markets responded leading up to it, how the markets responded after. All that we know with certainty is it'll probably be pretty volatile. One way or another. So if you are participating, make sure you're actively watching your positions, and just don't do anything stupid, in my opinion. Don't over leverage, don't go 100x long or 100x short or whatever, because it's so difficult to predict. That being said, I think in the long run, obviously, it should lead to greater price appreciation. It's always kind of an indirect one for me, so I'm a little weird about it. Just because the supply goes down a little bit, or the inflation goes down, it doesn't necessarily translate into increased value unless people believe it does. And so, yes, lesser inflation, the supply is slowing. We're getting close to maximum supply being out there. So yeah, all in all, I think it's pretty good. It's good for Bitcoin to show maturity. We've done this a few times and it's worked really well. But yeah, just be careful if you're trying to trade it. I think that's probably where I'd leave that one. I don't know. Do you think it's gonna, what do you think it's gonna do? Is price gonna go up, down, sideways?
I mean, it's going up.
Going up?
You made a good point when you said, well, there, like it's only if people believe it, but people do believe it. This is the fourth time. And so it's all based on speculation, and everybody's on the same page with this one. It's not like an if. Yeah. I don't take my word for this, but this is how people think. It's not like an if, where this is the cycle. This is how it goes, right? So then it's interesting because maybe it doesn't follow the exact same pattern like you said, but we all in this space right now believe these cycles to be true. Right. And so I don't understand why it wouldn't project us. At what rate? I don't know, but and what events might happen in there that might alter what's happening. I don't know, but
is that financial advice or no?
Never. That's what I'm saying. Like there might be potential things that happen within the world that can change these, but as far as we know, based on this one piece of information.
Yeah. Part of what makes this a little bit more complicated is also the impact on the miners. So we talk a lot just about scarcity and price appreciation, but I think there's a fairly significant impact on the mining sector. So maybe we'll chat a little bit about that. So essentially, as the halving approaches, there's quite a few groups looking at, or at least opining on what the impact may be on the mining sector. With Bitcoin's halving event scheduled for April 20th, Jaron Mellerud of Hash Labs Mining shares insights on its potential impact on Bitcoin mining. Contrary to fears of a significant hash rate drop, predictions suggest a modest 3 to 10% decrease, with a swift recovery period expected. High-cost miners face pressure to upgrade to more efficient hardware, while innovative strategies for increasing profits, such as underclocking and diversifying income streams, are likely to emerge. Additionally, the halving could prompt further decentralization of mining activities globally. Do you think this is going to affect the miners? I mean, I have a lot of opinions on this, but their revenue is about to go in half. And so how do you think they respond? Do you think this is something we should be worried about?
I don't think it's something we should be worried about. I think that it's like anything. If you say that you got to fight harder because there's less of the pie, then people find better ways to do things. Yeah. And so I think like it says, that it calls for more efficiency, more innovation. Like, how do we do this better? And
it'll be interesting to see. It'll be interesting to see how, as a space, we maybe evolve.
Yeah.
Because if it's not profitable, then you end up with quasi-centralization, which is almost what we have in Bitcoin mining. The hardware now, like the difficulty for solving the problems that allow you to be the one that mines the block continues to increase. So revenue decreasing per block that you get to mine, and complexity and cost of hardware is increasing. And so what we see now is the capital expenditure of these new mining companies is in the billions. It's kind of like an AI company. Like, you can't just go to market with a few $100,000 and build an AI model. Like, you need billions of dollars worth of hardware, graphics cards, NVIDIA, et cetera, et cetera. So it'll be interesting to see what happens here. Like, I think we're getting to this point where, contrary to the whole ethos of Bitcoin, we're starting to see more concentration of miners. And if there's these clusters of miners that control so much of the hash rate, that is a massive risk vector. That's one single or very few points of potential failure, and that could be a big problem. Generally speaking, I think because everybody's so concerned about the hash rate going down, so what that means is certain Bitcoin miners might find it to be not viable for them to participate anymore, or at least in the short term. So they may stop mining for the time being until the price corrects, until it becomes profitable again. The fear is, and this article says they're actually expecting about 3 to 10% decrease in hash rate, which is not a huge problem. But there is fears that there could be a more significant reduction if the market doesn't force the price up to counter that. So we'll have to see. I mean, there's a lot of different forces suggesting up, down. I guess we'll have to see what ends up winning in the end. All right. Finally, network security. I kind of jumped the gun on this one a little.
I was going to say, I'll read this because you just answered it. So you might as well go. Bitcoin halving approaches, impact on price and network security. I think we just did this, but that's okay. With the Bitcoin halving event just around the corner, expected on or around April 20th, the crypto community is abuzz with speculation. Halving events, which cut the reward for mining new blocks in half, historically led to bullish market movements due to decreased supply. Ken Timmis of Cronus Labs highlights the importance of the capped Bitcoin supply and anticipates reduced selling pressure and potential price increases. However, the halving also raises concerns about network security and the impact on small miners. So,
to my point, it's becoming, the barriers to entry are increasing, right? It's becoming more and more expensive to participate. The whole like running a miner in your closet, which is how most people got started with Bitcoin, and which is what I think was very true to the ethos of like proper anonymous decentralization. And over time, because of demand and because the market has played out the way it has, it's just become a more competitive environment. But now these small mining operations don't have cash reserves. They don't have hundreds of millions in the bank from investment rounds. I mean, the investment rounds in these publicly traded mining firms are insane. Like many multiple hundreds of millions of dollars in each round. So they have these war chests. But if you're a smaller mining operation, you have, I don't know, one location in a data center somewhere with a few thousand miners, you're not going to have all that cash sitting there to offset the reduction in profit for a while. So yeah, I mean, I think as time goes on, this becomes more and more disadvantageous for the small guy, which leads to potentially some security concerns. The whole idea was to have, it was non-censorable because there was people, individuals all over the world that couldn't be identified or controlled by government entities. But now, I mean, you're a publicly traded, most of these mining firms now are publicly traded. So they're under the thumb of regulators in their jurisdictions, no matter what. So it'll be interesting. It'll be interesting to see how this plays out. Well, it'll be interesting to see if people care. Because as consumers, we don't necessarily get to choose who mines our blocks. So you don't have consumer choice. So we'll have to see. We'll have to see how the industry responds to this. But it does, in my opinion, pose some security risks. So there you go.
I mean, you don't say you have consumer choice because you don't have consumer choice of who does it, but you have consumer choice of participation, right?
I suppose you could not participate in BTC altogether if you're concerned about it. But cut off your nose to spite your face, I guess. BTC is going to rip.
Is that financial advice?
That is pure financial advice. It's going to rip. I don't know when or how far. So, but I mean, it's obviously an asset class. It's not going anywhere. Okay. Anyways, we've talked a lot about ETFs with respect to the United States, and we've talked a little bit about Europe trying to catch up, and Canada and other jurisdictions, but also China is starting to say, hey, we want to play here in a tax advantaged way and to do this ETF thing. So China's leading asset managers, Harvest Fund and Southern Fund, have applied for spot Bitcoin ETFs in Hong Kong, signaling a shift towards Bitcoin investment amid China's strict stance. With over 510 billion under management, their entry could mark a significant turn in Bitcoin's institutional acceptance. This move comes as Hong Kong becomes a strategic hub for Chinese funds to explore Bitcoin investments legally, awaiting Q2 for potential ETF launches. I'm not sure how many times you've been on, Christine, that we've talked about Hong Kong, but this is kind of interesting. China still has a fairly strong no Bitcoin policy, but this is kind of a legal way around it for these Chinese entities to register in Hong Kong. Is this going to be a big deal? Do we care? Do we care? Yeah. China has access to ETFs? What do you think?
Yeah, we do. You just said Bitcoin's going to rip. These are the kinds of things that are going to make Bitcoin rip. It's huge. These are the people that we thought, like you said, couldn't participate. And now they're finding workarounds so that they can. Because this is the thing about capitalism. People are going to want to play. People are going to want to have access. So they're going to find a way to do it. But but this is massive. I have friends who are over there in Hong Kong, and just what they're able to do power wise, it's crazy. I think that this is definitely something that could, I don't want to say shift the market, but it's one of those things. You're waiting for those, little bombs along the way that you set these explosions. This is probably something you want to pay attention to.
Well, I mean, you're adding over 1 billion potential holders to the ETF market in theory. I mean, obviously not all of China's residents or citizens or members of these two investment firms or clients of these investment firms. But I mean, I think globally,
it's probably 5 people.
Right?
Yeah.
I mean, I think globally we're seeing this interesting shift in narrative. And it was, honestly, it was probably started by BlackRock throwing their weight behind the Bitcoin ETF in the US. All of a sudden, everybody was going, wait a second. We didn't think institutions cared that much. All of a sudden, all the big institutions are saying, this ain't going anywhere. We better get involved. And so now we're seeing it in China. We're seeing it in the EU. We're seeing it in the UK. There's a lot of jurisdictions now looking at this, say, hey, I mean, we better get on board before people go elsewhere. So
yeah, I think that nobody was under the impression that they didn't care. I think that they were just kind of waiting for the point where they could say, hey, we're going to do this. We don't really care about what our government is going to say. We're going to find a way to make it happen.
Yeah,
right?
It is interesting that it's legal for them to register in Hong Kong and still have Chinese users. We'll have to see if that actually happens. Okay, we've talked a lot about Bitcoin. Let's switch gears a little bit and go to ETH.
Okay, Ethereum price soars as foundation converts ETH to stablecoins. ETH price surged past 3,600 amid market optimism, further fueled by the Ethereum Foundation's strategic conversion of ETH to DAI stablecoins. Speculation abounds on the foundation's motives, possibly linked to operational funding strategies. Previously mentioned by co-founder Vitalik, the market watches closely as Ethereum continues its bullish trajectory.
Yeah, I mean, there's a few reasons, I think, that Bitcoin's price is flying. They had another major upgrade, the Dencun upgrade, which we're going to talk about in a few minutes. That was a big deal, and obviously we'll cover that. But there's a lot of talk about the ETF. I mean, is an ETF going to be approved? I don't know. Can you make the same arguments that you could have made once upon a time for Bitcoin now for Ethereum? Maybe. So we'll have to wait and see. There's there's a lot of politics involved in the US in particular with this. And so we'll have to see what happens. But I mean, this is just prudent financial management, in my opinion. Another company that has done this very well is Chainlink, where they've taken advantage of their incredibly high market cap and their ownership of tokens. And instead of going to raise money and put tokens in the hands of a whole bunch of venture firms in addition to what they already have, they often will just convert some of their tokens to stablecoins to help fund the future of the project. I mean, ETH Foundation and Vitalik in particular has mentioned doing something very similar here, and they have done it consistently over time. And it's how they continue to fund and finance development of ETH, which to me makes perfect sense. It's bullish because they're still building, they're still developing at a faster pace probably than ever before. And backwards compatibility was always a concern, but now we've had a few of these pretty significant updates where backwards compatibility has essentially gone off without a hitch, and there hasn't been too many issues. That's a big feather in the hat, I think, for core developers at Ethereum. So we'll have to see. Okay, I kind of hinted at this one, so I guess we can jump right into it. Ethereum's Dencun upgrade boosts layer 2 ecosystem, lowering gas fees and doubling transactions. Ethereum's Dencun upgrade effective March 18th, 2024 has notably enhanced the layer 2 ecosystem by significantly reducing gas fees. This development has led to a surge in transaction activity across various L2 platforms, including Arbitrum, Base, and Optimism, while the L2 ecosystem now averaging over 124 transactions per second. Arbitrum and Optimism have seen their daily transaction counts double, while Base has emerged as a leading L2 in terms of transaction volume, thanks in part to the interest in the layer 3 DGen chain. Okay, Dencun upgrade. Did you hear about this other than hearing about it from me? Is this something that was important in your sphere of
It's
influence.
important to me because of all the transactions that I do. So yeah, I mean, I am one of those people that, because I'm working in different ecosystems, I'm sending money everywhere all the time. Like I said, I'm not a one ecosystem to rule them all. And so I notice the effects of this everywhere, and I'm grateful for it. It's
I mean, it's hard to argue with Ethereum's market presence. I mean, it's no secret that we focused on many L1s over the years and developed things for different ecosystems and different communities. And I probably expected ETH to be less relevant now. If you would have asked me a few years ago, I probably would have told you that ETH is going to be a little less relevant, mainly because I thought there was going to be, again, backwards compatibility, scalability, quite a few issues that we now have ways to solve. This proto-dank sharding is a big one, obviously, allowing significant scalability. It was starting to become a problem again. L2s solved the original problem of ETH mainnet congestion, but then the L2s became so big that they were now creating more congestion, and they've now built this, deployed it, and it went off without a hitch. So I think, obviously, this, in my opinion, is a testament to their ability to continue to innovate when most of us, maybe not most of us, but when some of us thought it was going to be next to impossible, they're proving otherwise. So very good.
This goes backwards into the last one too, where it's kind of like, so in my opinion, if you are going to sell a bunch of your own tokens for development, as long as you keep throwing out things that make it better, like it's kind of like, of course we would get behind that. Of course we would continue to invest in that, because everything we're using in our daily lives is getting better because of it, right? It's like what you want your government to do, but they don't. But you know, like I can keep putting, you know, keep putting my belief in you and investing in you if you keep delivering these things that make our lives better. And so I don't see any reason why. I mean, you said ETH, you didn't think it would be that relevant, but it's kind of where all these things are born, are made. You know, they keep creating a space where it makes it worth it to develop, right? It keeps getting better. So
yeah, and I mean, it's Solidity, love it or hate it, given all of its limitations, it still is by far the most prolific programming language in the space. So I mean, compatibility among chains with ETH and ETH L2s, it just kind of makes sense. I've been a fairly vocal critic of the fact that all these L2s and the continued proliferation of L1s is creating another problem. It's creating an unexpected problem. And while we're increasing efficiency and performance and so on, often we're fragmenting liquidity. So maybe we can talk a little bit about that one, Christine.
Okay. ZkLink targets Ethereum liquidity fragmentation with layer 3 solution amidst security concerns. Look at you, JD, lining it up. ZkLink aims to address Ethereum's liquidity fragmentation issues through its layer 3 network, ZkLink Nova, which aggregates liquidity from 8 layer 2 networks. The introduction of Merge Token, a smart contract consolidating assets into a single token, seeks to enhance capital efficiency and trading conditions. Despite the potential benefits, concerns arise over the security of assets bridged to Nova and locked in smart contracts, reminiscent of past multi-signature wallet breaches.
Yeah. So this is I think going to be one of the bigger challenges that we have this cycle in the space, and that is how to meaningfully and in a positive way address liquidity fragmentation. And there's some risks, though, as this article highlights, that if not done appropriately, we're going to end up with a similar situation to the early bridges, where it was like simple multi-sigs, simple smart contracts on every chain, and it introduced a ton of risk vectors. And that's kind of what they're suggesting here, is that you're going to have all of these kind of holding contracts somewhere on all these different L2s that are going to be perfect targets for exploits. Obviously, it's idle assets sitting there. They're going to try to find ways to exploit those assets. Is that a concern? I'm not sure. What I do know about ZkLink is they have an experienced group. They are well capitalized, and they have the support of some fairly large VCs in the space. So for that reason, I think they're probably going to come out with a solution that's better than just a 203 multi-sig, some nonsense.
And I have two.
Yeah, and I have two of the wallet keys. Anyways, I mean, obviously, I think connecting just the Ethereum L2s is going to be a huge advantage. I mean, up until now, and again, I've been somewhat of a critic of this, but we're doing all these liquidity mining campaigns on each of your L1s or L2s and airdrops, and we're doing all these other things to try to attract attention. But that's not sustainable for any significant amount of time. Like we meaningfully have to find ways that this stands on its own, not just we continue to buy attention in perpetuity. And so, I mean, hopefully we find solutions that don't require a whole bunch of risk taking, and we can just get to a point where it's not this vulture kind of capital. I call it vulture capital because it's just people taking advantage, institutions, entities, ways.
I think you can't get mad at that though, because think about what's happened in the past, decade, where you start with an idea and then you get some of these like early adopters and it starts to grow. And now we're at a point where it's growing. We have to keep people engaged and we have to allow time for the natural development of this to happen. Like this wasn't even a thing before. It wasn't something you had to consider because nobody knew that it was going to be this big and this, so we're in these opportunities that are coming up. I don't think it's like necessarily, I understand not wanting to have to incentivize everywhere. And I'm in this game with you. And I feel the pain of like, we got to keep buying people so that they'll use, essentially that's what you're doing, right? You're buying people so that they can join your ecosystem. But it's because you have a belief that what you're doing is better. As long as you stay as a builder in that mind frame of trying to stay on top of providing the best solutions for people, options for people, then I don't think it's a bad thing for now. And then as we grow, we'll find these solutions. I don't think we have to stress about it as much as I mean, obviously people are thinking about it. We have solutions coming. Is the first one going to be the one to save us all? No, probably not, but it might be, but we just need to stay open to it and develop as it goes.
I mean, as much as I poo-poo on vulture capital, because it does suck and it's not sustainable, it's what's keeping the market going right now. So
yeah, that's what I mean.
That money is moving around and capitalizing all of these projects. Yeah. Obviously, is an asset. There just comes a point where I think it's significantly diminishing returns as we continue to add L2s, where I think we're adding more complexity and in exchange, not necessarily getting the efficiency and benefits that justify that. That's
right. And without that opportunity, I hear what you're saying, but without that, there's probably a lot less development that would happen, yeah, right? We might not end up with the best solutions or options. And so I think that for now, in this kind of explosion of creative minds trying to work the problem, I think it's important.
Yeah, I'm with you. Definitely don't disagree. All right, let's bring this puppy in for a landing. There's some controversy going on. The ETH Foundation has submitted a proposal to cut the issuance rate of new Ethereum on the chain. So this proposal from the Ethereum Foundation researchers to reduce the pace of a new Ether issuance has ignited controversy within the community. Intended to curb the dominance of liquid staking services and reinforce Ether's monetary role as an asset, the proposal aims to lower the annual new ETH issuance rate to 0.4%. Critics question this necessity and express concerns over the Ethereum Foundation's influence, highlighting a broader discussion on governance and Ethereum's economic model adjustments.
Before, what is it now that they're cutting it to 0.4%?
Because
I don't know, it's hard to judge how big of a deal this is.
Either way, I mean, this is kind of one of those, this is a philosophical question.
Right.
So because of the limitations in the design of the L1 tokens, the coins that power the chain, we've had to create for proof of stake. We didn't have to, but it makes perfect sense to have liquid staking tokens that preserve the benefits of the original token, both for the chain and for the user, while also giving equity access to use elsewhere in DeFi. So what this is suggesting is that the Ethereum Foundation doesn't like how focused the market is on Lido, LSTs, and others, on Ethereum in particular. There's arguments that could be made that it takes away from decentralization because you're centralizing a lot of the control of the validation and such to Lido or a third party or Benki or any one of the liquid staking providers. So I do understand that there's kind of like a bit of conflict between the foundation and between the community at large. And another problem, and this has been one of my biggest criticisms of governance in general, is misalignment of incentives. So the Ethereum Foundation has completely different end goal, most likely, than the other people that have big positions in Ethereum and as such have an outsized voting control. And so it's kind of this battle of behemoths in some ways. Who's going to win? Is the Ethereum Foundation so committed to this that they're going to throw their weight behind it and make it happen? Are the people that hold Ethereum more concerned about short-term profit than long-term viability? I don't know.
Of course they are.
Well, of course they are. But I mean, I hope that this opens the discussion to continue to evolve governance structures. Having everything come down to a pure democracy doesn't always work. There's reasons that every single thing in your country are not decided by a public referendum, because it's insanely inefficient and doesn't always get the best result because of asymmetry of information. What do you think? Do you think this is who's going to win this battle? Do you think the foundation is exerting more influence than they should have? Where are you at?
No, I think I need more information, but I see what you're saying. Because ideally people talk about these, DAOs and whatnot, and it being more decentralized, but it ends up being not, because what happens is we all delegate to whoever, and then because it's easier, because the average
4 or 5 people making decisions, right?
Yeah, you actually have less people making decisions, and like you said, a lot of the time decisions that aren't aligned with, the foundational principles of what's happening.
Right.
So I see what you're saying, and I think it's kind of a bold move to say, we're not really on board with this. Let's bring it back in. It also kind of takes away from the balloon effect of what happens. I am all for liquid staking. I'm a fan, because as a user, as somebody who wants to offer something also, it gives more opportunities. But in the same height, we're creating this false influx of volume, where if something already has a job, how are we giving it other jobs? So yeah. I think long term, the balloon effect of what's happening, it's to be considered. I don't know. I think it's interesting. Like I said, I'm a fan, obviously, of
one maybe design flaw, I think, has a space, and we operate liquid staking platforms, so yeah, it's a flaw, but we all still do it.
Yeah.
Well, there's quite a few. I think there's quite a few design flaws, but one of the biggest is that you can't pick, for any of the liquid staking platforms that I'm aware of, you don't pick who you delegate to. Mm-hmm. So the liquid staking platform generally does it by some automated ranking system. And that ranking system, though, doesn't necessarily take into consideration the caliber of governance participant that validator might be. So what happens is all these validators also end up with outsized vote. And they've been delegated by people that may or may not support their positions on things.
But that's what I'm saying. And a lot of the time, you have these massive powers. I see it all the time, where you have these massive powers who maybe vote to abstain on something. Like they're not actually even participating.
Yeah. So, I mean, hopefully, I guess we could probably spend a whole episode. Patrick and I the other day mentioned that we should have a governance episode too, because there's a lot left to be desired in how governance runs. And we've gone through incredible kind of exploratory processes with different vendors and different people to look at governance and to ideate and to take all that we've learned as a space. And we still don't have a solution that I think is viable and sustainable. So it'll be interesting to see what kind of innovation comes from governance. Probably not going to be from me, but we'll definitely talk about it. All right. That wraps it up for today. We talked all about BTC and ETH. Quick reminder to everybody. I see there's a pile of people watching live on Twitter or X. Great to have you all. We're a live show, Monday to Friday, 12:30 p.m. Eastern. If you missed the show, you can find us, obviously, on YouTube, or you can find the replay on my Twitter when the video's done. The thing is, if you want to like, share, subscribe to our YouTube, the cool thing about that is the comments are interactive. So when you comment, I can respond to them live while the show's going on. So check out the YouTube. Like, share, subscribe. Help us get the word out. We're just trying to dispel some FOMO and make sure people don't get fudded to death, and help you make smart, informed decisions. With that, today I say to you, Christine, go FUD yourself. Before we hang up, quickly, kinetic.markets, correct? With an S? Kinetic.markets.
No, .market. Like the actual site is just kinetic.market.
Kinetic.market. There you go. Check them out. Later.